Welcome to the Opening Bell Report.
I want to start today with a little mental exercise. It might be a bit painful, so just brace yourself.
Okay.
I want you to close your eyes and imagine it is February of last year. You are sitting at your desk, maybe you've got your coffee, and you open up your brokerage app or you're reading the financial news,
Yep.
and you see a ticker symbol for a company that, honestly, it looks like a dinosaur.
Total dinosaur. A legacy hardware company.
Right. It's the company that made those, those little plastic memory cards you used to put in your digital camera back in 2010.
The ones you lose in your desk drawer.
The ones you lose in your desk drawer. It feels dusty. It feels boring. So naturally, you scroll past it, you ignore it, you put your money into something exciting, maybe some crypto, maybe that new EV startup everyone was talking about.
The shiny object syndrome. We all do it.
Exactly. But fast forward to today, February 2026, you open that app again, and you realize that boring dinosaur has just pulled a maneuver that, it just defies the laws of physics.
Yeah.
That investment hasn't just doubled. It hasn't tripled. If you had bought the bottom, you're looking at a return of over 2,200%.
In under 12 months.
In under 12 months. That is lottery ticket territory.
Yeah.
But here's the picker.
Yeah.
We aren't talking about a lottery ticket.
Yeah.
And we aren't talking about a meme coin. We are talking about SanDisk. Ticker symbol, SNDK.
A company that went from being an afterthought, a literal piece of plastic in your drawer, to becoming the absolute center of the financial universe in less time than it takes to build a house.
It is mind-bending. And look, welcome back to the deep dive. Today, we are tearing apart a specific analysis report that just dropped. It's titled SanDisk Unchained, the 1,000% AI Storage Revolution, dated February 3, 2026. And our mission today isn't just to gawk at the stock price, though. Trust me, we are going to gawk at the price.
Oh, we're going to gawk.
We need to figure out how this happened.
Right, because gains like this don't just happen in a vacuum.
Exactly. How does a maker of, commodity hardware transform into what this report calls the third pillar of the AI revolution?
Yeah.
How do you go from selling thumb drives to seeing your stock chart go completely vertical?
It is the question of the year. And what I love about this report is that it argues this wasn't an accident. It wasn't just hype or some, Reddit pump and dump. It was a perfect storm where structural corporate engineering met a massive technological shift.
Okay.
It's a story about what happens when you finally unchain a beast that's been locked up for a decade.
SanDisk Unchained. I like that. Okay, let's unpack this. We have to start with the scoreboard because the numbers in this report are frankly staggering. We are recording this right after the close on February 3rd. Where are we standing?
Well, the headline number is the stock price closing at $665.24.
Wow.
But what is wild is the velocity. Just today, in a single trading session, it moved up 15.44%.
Wait, hold on. 15% in a day. For a penny stock, sure. But for a company this size, that is violent.
It's massive capitalization being created out of thin air. But to understand the 2,200% number, you have to rewind to the post-split low.
This was right after they separated from Western Digital.
Right. Back when the market was still trying to figure out what SanDisk was worth on its own, the stock hit a low of $27.90.
$27.90 to $6.65.
That is where you get the 2,200% figure. That is life-changing money.
Right.
If you put 10 grand in at the bottom, you are sitting on over $200,000 right now.
That makes me want to cry a little bit. But let's say I wasn't a genius. Let's say I didn't time the absolute bottom. Let's say I waited for the listing to settle and I bought in around, say, $50.
Even then, you are sitting on a 10-bagger. You have made over 1,000% on your money.
Wow.
And that is exceptionally rare for a large cap stock. Usually, to get 1,000% returns, you have to risk your money on something incredibly dangerous that might go to zero. You don't usually get this from a company with billions in revenue and, real factories.
SanDisk has basically left the S&P 500, the NASDAQ, even most of the other chip stocks in the dust. It's an outlier event.
It is the market's hottest trade, bar none.
So that's the what. We know it happened. Now we have to do the detective work on the why. Because SanDisk has been around forever. Why now? Why did it suddenly wake up and choose violence against the short sellers?
To understand the explosion, you have to understand the constraint that existed before. We need to talk about what the report calls the unlocking moment.
This is the spinoff from Western Digital.
Correct. For a long time, SanDisk wasn't an independent company. It was trapped inside a much larger portfolio owned by Western Digital.
It was like, I don't know, a cool engine trapped inside a heavy family sedan.
That is actually a perfect analogy, yeah. SanDisk was this high-performance engine, but the car was being weighed down by a trailer full of wrecks.
And the trailer was.
That trailer was the hard disk drive business, or HDDs.
Okay, let's break that down because I think for a lot of people, storage is just storage. I save a file, it goes somewhere. What is the difference between the trailer and the engine?
So the hard disk drive business, that's the old technology. Spinning magnetic platters, it's reliable, it's cheap, but it's slow. We call that cold storage.
Right.
It's where you put data that you don't need to access instantly. It's a low-growth, steady business.
It's the boring utility company of storage.
Exactly. Financially, it's an anchor. But SanDisk is built on NAND flash solid state drives, or SSDs. That is the high-speed access memory. That is the high-growth sector.
So when they were together under Western Digital, investors couldn't just buy the fast part.
Right. If you wanted to invest in high-speed flash memory, you were forced to also buy the slow-growth hard drive business. Wall Street calls this a conglomerate discount. The value is obscured. It's like trying to sell a Ferrari, but you tell the buyer they have to take a rusty tractor along with it.
Nobody wants the tractor.
Nobody wants the tractor. So the stock price suffers. Then came February 2025, the spin-off. They cut the trailer loose. Suddenly, SanDisk became what we call a pure play.
Pure play. I see that term highlighted in the report.
It means it is a company that does one thing and does it well. It became the market's only large-cap pure play on NAND flash memory.
So the separation allowed the market to finally see SanDisk for what it really was.
Yes. The market stopped pricing it as a legacy hardware maker and started pricing it as a high-growth tech infrastructure company. The handcuffs were off.
Okay, so the handcuffs are off. The race car has dropped the trailer. But a race car still needs fuel. You don't get 1,000% gains just because you filed some paperwork to become independent. Something else had to happen to drive the price to $665.
And that something else is the AI data supercycle.
I feel like we can't have a conversation about stocks in 2026 without saying AI. But connect the dots for me here. Why does artificial intelligence care about SanDisk? I thought AI was all about chips, NVIDIA, processors, the brains of the operation.
That is the common misconception. Everyone focused on the brains, the compute power. But think about it this way. If you have a super genius brain, but it takes you an hour to remember a single fact, you aren't actually that smart in practice.
You're bottlenecked.
Exactly. We call this the von Neumann bottleneck in computing. The processor is incredibly fast, but if the data can't get to the processor fast enough, the processor just sits there, idle.
Right.
And when you're paying $40,000 for an NVIDIA chip, idle is burning money.
So the AI models got so big and so fast that the old storage just couldn't keep up.
It's all about training. To train these massive models like the ones coming out now in 2026, you are feeding them oceans of data, petabytes of text, images, video.
Yeah.
You need to stream that data into the GPUs instantly. Old hard drives simply cannot do it. They're physically too slow.
So they need high-speed SSDs.
Massive amounts of them. And this is where SanDisk got their timing perfect. The report highlights a specific piece of technology, the BiCS8.
I saw that. BiCS8 218-layer 3D NAND. It sounds like a droid from Star Wars.
It does, doesn't it? But it's actually an engineering marvel.
Okay, let's unpack that. 218-layer. Why does the layer count matter?
Imagine Manhattan. You run out of land to build houses, right? So what do?
You build skyscrapers.
Exactly. For years, memory chips were flat, one-story houses. Then they started stacking them. That's 3D NAND. SanDisk's BiCS8 technology is like building a 218-story skyscraper of data on a tiny footprint.
Okay, so you get way more data in the same space.
You get density, which lowers the cost per gigabyte, but more importantly, because of the way they wire these skyscrapers vertically, the electrons have a shorter distance to travel. You get massive speed increases.
And this tech hit the market when?
At the exact moment the hyperscalers started upgrading their data centers.
Hyperscalers, we're talking about the big dogs.
Amazon AWS, Google Cloud, Microsoft Azure, they are all racing to build out infrastructure for edge AI, and they realized they couldn't do it with old tech. They needed the BiCS8 stuff.
So you have a new, independent company with the exact product the biggest companies in the world are desperate for.
And that leads to the most important economic concept, supply and demand.
The report mentions a specific stat here that just blew my mind. Demand for enterprise-grade SSDs is outstripping supply by 3 to 1.
3 to 1. For every one drive SanDisk can make, there are 3 buyers fighting for it.
That is a seller's market, if I've ever seen one.
And it's an anomaly. Usually, the memory market is cyclical. Manufacturers make too much, supply gluts happen, and prices crash. It's usually a brutal business.
Right.
But right now, SanDisk has massive pricing power. They can name their price.
Because Microsoft and Google can't stop building. They're in an arms race.
Exactly. They have to pay.
Which explains the financial turnaround.
Mm-hmm.
This brings us to the V-shaped recovery mentioned in the report.
It's textbook. If you look at the old SanDisk in 2025, revenue was declining or stagnant. They were posting net losses. It looked like a dying business.
And the new SanDisk in 2026.
Revenue is up 21% quarter over quarter. And profitability flipped from a loss to a $112 million net profit. And the report says that profit is still growing.
That is a massive swing. But And here's where it gets really interesting to me. The stock didn't just go up because they made a profit. A lot of companies make a profit. This stock went parabolic.
Now we are getting into the psychology of the market. This is where the drama happens.
The short squeeze.
Yes. See, a lot of analysts on Wall Street are creatures of habit. They looked at history and said, memory is a cyclical business. It booms and then it busts. So when SanDisk started rising, they bet against it. They took short positions, betting the price would fall.
They thought it was just a temporary blip, a bubble.
They underestimated the AI demand. As the price crossed $300, then $400, then $500, those short sellers were in trouble.
Deep trouble.
To close a short position and stop losing money, you have to buy the stock.
So the people betting against the stock were forced to buy it, which drove the price up even more.
Exactly. It's fuel on the fire. A feedback loop. And then you add the second psychological factor, institutional FOMO.
Fear of missing out, corporate edition.
There are massive mutual funds and pension funds that are mandated. They're literally required by their rules to hold AI growth stocks.
And they looked at their portfolios and realized, uh-oh.
They realized they were overweight on chips and underweight on storage. They missed the boat. So you have these massive funds realizing they need to own SanDisk to meet their mandates, and they have to buy it now, regardless of the price.
So you have short sellers panic buying to stop losing money, and big institutions panic buying because they missed the trend. No wonder it went up 15% in a day.
It's the perfect storm, a structural spin-off, a technological breakthrough, and a psychological panic all hitting at the same time.
So that brings us to the big question, the question every listener is asking right now. Is it too late? We are at $665. The report mentions a third pillar theory. What is that about?
This is the bull case, the optimistic view. The theory is that the AI hardware market rests on three pillars. Pillar 1 is compute, that's NVIDIA.
Right.
Pillar 2 is networking, that's Broadcom.
And for a while, people ignored the third leg of the stool.
Right. And now the argument is that SanDisk is solidifying itself as that third pillar, storage. If the market accepts that SanDisk is just as essential as NVIDIA, then the current price might actually be justified. The report mentions a price target of $750.
That's another $85 or so from here. That's significant. But we have to play devil's advocate. We have to look at the risks. What's the bear warning?
The warning is that, trees don't grow to the sky. The stock is trading at a forward price to earnings ratio of about 51.
51 times earnings. That is rich.
It's expensive. It's typical for a hyper-growth company, but it leaves no room for error. The report explicitly says the stock is technically overbought.
Meaning it's run too far too fast.
Likely. A cooling off period is probably coming. It might dip or go sideways for a while as everyone catches their breath. The RSI indicators are just screaming that it's overheated.
But the report concludes that the long-term trend remains violently upward. That is a strong choice of words. Violently.
It reflects the sheer force of the demand. Even if the stock price takes a breather, the demand for the BICE S8 tech and the need for AI storage isn't going away next week. We are in the early innings of this data supercycle.
So what does this all mean for us, for the person listening who maybe isn't a day trader but wants to understand where the world is going?
I think the lesson here is that in technology, the boring stuff matters. We get dazzled by the brains, the AI models that can write poetry or generate images.
Yeah.
But none of that works without the plumbing.
The plumbing being the storage.
Exactly. SanDisk proves that providing the infrastructure, the plumbing, can be just as lucrative as building the flashy stuff on top of it.
And it's a reminder that sometimes the biggest opportunities are hidden inside other companies, just waiting to be unlocked.
The value is always there. It just needed the freedom to show itself.
Well, it certainly showed itself this year. 2,200% returns. I'm still wrapping my head around that number.
It's one for the history books.
Here is a final thought to leave you with. Something to chew on while you commute or go for your run. If SanDisk has truly become the third pillar of AI hardware alongside giants like NVIDIA, is a 1,000% gain just the beginning? Or have we just witnessed the peak of the pure play premium?
That is the multi-billion-dollar question.
Thanks for diving in with us. We'll see you on the next one.
Stay curious.
Don't forget to like, share, and subscribe for more.